Welcome to Strategy Saturday. I'm Charles Carillo, and today we're discussing the decline in apartment construction and, more importantly, what many investors are getting wrong about the current impact on property performance. Now, if you receive our weekly real estate newsletter, you know that we regularly discuss how apartment construction has been slowing. And as a side note, if you do not already receive our weekly newsletter, which is published on Wednesday, you can sign up for it free at hspsignup.com. So HSP like Harborside Partners, signup.com. And you can literally read it in under 1 minute. So the apartment construction market has been experiencing a significant slowdown as the cost of financing has increased since mid-2022. And the Census Bureau has reported about a 41% decline in multifamily construction starts from its peak in April of 2022. So it typically takes about 2 to 3 years for a new apartment complex to be constructed. And in 2024, the U.S. completed about 518,000 units, an all-time record and a 9% increase from 2023. Now, many of these projects delivered in 2024 were begun during the low interest rate environment of 2021. Now, here we are in 2025, there's an expected 15% decline with around 444,000 new apartment deliveries, and this downward trend is expected to continue throughout 2026 and 2027 with a rebound that's anticipated in 2028 with 391,000 new apartments being expected. So how do new apartment deliveries impact apartment owners? Now, since most apartment deliveries are Class A apartments, it primarily affects Class A apartment owners, but this also trickles down to Class B and possibly Class C apartments. Now, when new apartments are delivered, they are offered on the market with concessions, okay? So during periods of significant apartment deliveries such as 2023 and 2024, these concessions can be substantial. Instead of a move-in special of 1 month free, they start offering multiple months for free, half off rent for an extended period, making tenants flock to these new units. Sometimes even on the renewal, they will give some sort of concession. Now, some more examples for a new apartment complex that opens across the street from a Class B complex, which rents 2 bedrooms for $1,500, and the new complex is renting for $2,000. Okay, so ordinarily there would not be any pressure on either property in regular market conditions. Tenants looking to spend an extra $6,000 per year for a new unit would opt for the Class A, while Class B tenants would stay put. However, when the new Class A starts offering 2 or 3 months of free rent, the pricing becomes very comparable, and Class B tenants can move to the new building for approximately the same price over a 12-month period. And then we start seeing the pressure that is pushed through the market. Now, of course, when renewals occur, these concessions will start burning off little by little, just enough for people not to move, but the concession pressure can last for years. Okay. As new deliveries slow down over the next 3 years, we'll start seeing rent increases again as concessions will not be as aggressive. There might be still a free month of rent or, with the new property, but your Class B property is unlikely to lose people to the new Class A complex just because of 1 month of free rent. Additionally, if interest rates increase or high inflation restarts, the slowdown in multifamily starts may continue. And apartment owners who have been negatively affected by higher interest rates over the past few years may find some relief in rent increases, but that might be a little too late. So please remember to rate, review, subscribe, submit comments and potential show topics at globalinvestorspodcast.com. If you're interested in actively investing in real estate, please check out our courses and mentoring programs at Syndication Superstars. That is Syndication Superstars. Look forward to 2 more episodes next week. See you then.
You always want to invest in real estate, but didn't have the time, didn't know where to find the deals, couldn't get the funding, and didn't want tenants calling you? Since 2006, I've been buying income-producing properties in great locations that provide us with consistent passive income while we wait for appreciation in the future and take advantage of tax laws while we're waiting. And unlike your financial advisor, we invest alongside our investors in every property we purchase. Check out investwithharborside.com. If you like the idea of investing in real estate, if you like the idea of passive income, partner with us at investwithharborside.com. That's investwithharborside.com.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.